The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, this is the most dangerous time of the year for you folks because I actually feel that I know what the heck's going on in the market. I posted a chart here showing the fact that we went down overnight, and we went to exactly one standard deviation, folks, and that's where the options players have to come in and defend their positions. Otherwise, look out. And if we go below that low, they can't, and there's where the real problem lies. Just to give you an idea, we talk about ABCD here quite a bit, just about every day. Anyway, here's what's happened since that low was hit. You'll notice here, if you're watching this closely, you can see that the standard deviation was A, B, C, D. We went up to 39. I can't remember the first handles. 39.40 was the top of that A, B, C, D line. We backed off a little bit. Now, if we go below there, that's where the real problem rises. And I'll give you my 2 cents worth, a little story behind it and everything, because I enjoy telling this because the memories behind all this stuff are very vivid in my mind, and I really enjoy doing it because it was a great time in my life. And I'll get this up here and talk to you right now. Here is the stock market in 1987. The reason why I'm showing that is because several times, this was the top, August 25th of 1987, about that, I think it came in on a Tuesday or Wednesday. I had been on the show telling Bill Griffith there at FNN, Financial News Network, that later became CNBC. I had been a guest there because my Astrocycles book had been selling well, and so Bill loved astrology, and so did Ron Insana, and Sue Herrera was a dear friend because she was dating my best friend, Jay Cross. Anyway, I said there was going to be a top on that day, and then we came down, and we made the solar eclipse down here on the 23rd of September. Okay, and then they rallied up, and I was there on October the 2nd, and I told him that, I told Bill Griffith, I said, we're probably going to have a down day sometime in October of over 300 points in the Dow Jones. And the reason why I said that was the largest down move we had up until that time was 190 points. Well, you multiply 1.618 times 190, and you come up with a little over, I think, 315. Well, it was down more than 500 points on that day, the 19th. Now, here's why it's so important. All I was doing is when I saw these aspects occurring like this, and we had a solar eclipse on the 29th of April, if you'll remember, we rallied up into 8 days into the May the 5th. Okay, that was the Venus conjunction, which is a 0 degrees, means it was starting a cycle. And then I said it had to be down. It absolutely had to be down on the 5th of May, and it was. And we went down, and we came down quite a bit. Anyway, the key level now is, here's what you have to do. From the 5th of October, 2nd of October, to the 19th was 17 days, calendar days, okay? So you take May 5th of this year, you add 17 days to it, and look what you come up with. You come up with Sunday, the 22nd of May, which also happens to be Tommy John of the old Los Angeles Dodgers, New York Yankees, Cleveland Indians, and Chicago White Sox from Terre Haute, Indiana. Okay, now let's move on to where I think what is going to happen. Now, this is my opinion, and believe me, I really, all I can do is give you my 2 cents worth, folks. But we have been, and I'll give you this little by little, and hold on here a second here. Get up. There we go. Here's where we are as of, this was as of Tuesday. Tuesday, we were trading at almost 4,100. That was exact 382. The high was 40.93. We're quite a bit lower than that now. But look at this, folks. Look, this is the fourth right there. There's the fourth. That was the date. Now what we're doing now is we're looking to see what's going to happen when we get down into this area right here. So what you have to do is you have to move on to a weekly chart. And oh dear, don't tell me I've lost the weekly chart. Please tell me that. Don't tell me this. Please, 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 please. Oh, shut the front door. Don't ever let an Italian work a computer, folks. It's not worth it. I don't have it. Shucks. I will give you the number though. We're trading today right at around 3,900. The number is right around 3,600, folks. That's the weekly 382. Okay. Now, the reason why this is important is we've got, and with the market, if the market rallies really strong today and is up 500 points, forget it. None of this stuff is working. It doesn't mean anything at all. But if we go down, folks, we are going down hard. We were down 1,200 points in the Dow Jones Industrial Average yesterday. Now, the same thing that I did with Bill Griffith, I'm going to do it now. You multiply 1,200 times 1.618, you come up with 1,900. Okay, so I think we're going to see a day, either not today, well, it could be today or Friday, okay, or Monday or Tuesday, one of those days, one of these next 4 days, we should see a move down in the Dow Jones of 2,000 points in the Dow Jones. I know you think that's nuts, but hell, I am nuts. Why would you not think any different? But it's doing what it's supposed to be doing technically. And that's the whole key to what we're looking at here. Now, if it doesn't happen, it's no big deal. But if it does, remember, that's going to be one heck of a buying opportunity. That's the bottom line of what we're watching here. Now, our guest today is supposed to be Tim Boss, Financial Cycles Weekly. We'll be on here, but I wanted to show you some statistical stuff that it's a little scary, actually. But you like to be scared, so we'll do this anyway. We'll put this up here and show you where we are. Mr. Rich Anderson was kind enough to send this to us. You can see over the I'm just going back over 80 years, folks. You can see the number of days, okay, that the market has lost 1%. This has never happened before except in 1929, folks, where the market has lost multiple days of 1%. And if you look at the NASDAQ, and the NASDAQ is up today, which is, pretty strong. But that's what we're looking at right here. Now, I really think that there's nobody out there who's really scared yet. The VIX index isn't going crazy. So they've got to scare it a little bit, I think. And if they scare it with a 2,000 point down move in the Dow, then that'll be it. Going below that standard deviation at 3840 in the S&P would be very, very negative, and you would want to stand aside if that is the case. If you have any questions, folks, it's 877-927-6648. And we will keep an eye on that because I think it'll be interesting to see if this is what is happening. I'm not watching what the markets are doing right now because it's on a different machine, so I'm not able to see what's going on. But remember, we have been in a down move. And in the videos that I send out every night, folks, I try to give an idea of where to get short. Now, here's one that I sent out. This was sent out, hold on just a second, Tuesday night. Let's get this up here. Here we are on Thursday. Tuesday night, I sent this with the S&P and also the YM, the E-mini. Look at the E-mini, a perfect 382 retracement. Just absolutely spot on. That was the same thing with the S&P. I believe that the price was at 40.40, as I recall, and we're a little lower than that. All right, let's get back to commercials. 877-927-6640.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've been asked to talk a little bit about the natural gas. You'll notice here that we yesterday we made a 382 retracement here, just within $100 of the contract, which is very active. And of course, we had this huge move to the downside. The 382 is very good in strong trending markets, folks. I'll bring in a couple others up here that I think you'll be interested in. This happens to be one that one of our folks from London that was in the show on my trading day on the 17th actually did this trade. He had really started to follow 382s, but he had this beautiful Gartley here, and he sold some contracts here, and he stayed short and went down to here, and when it went up to this 382 rally here, folks, he doubled up because he's a member of Tom Hugard's Trader Tom site. And Tom recommends when you have moves like this and they start down hard to really press. And so he started pressing the crude oil. Now this is it's a huge drop, folks. We're talking $7,000-8,000 here, and with contracts of 20 and then 20 and 20. I don't know exactly where he got out. It was down here a little bit lower, but he made over $330,000 trading crude oil on one day, and so that's a pretty good hit for someone to do. So I think it's I've shared some of these because these things are really quite simple, so you don't really have to worry too much about it. Here, let me show you the second. This is the second part of this because he's let me get this up here. You'll see how it ended up, and you'll be very, very easy to see here. Okay, now as you can see here, there's where he put the original position on here is when we had the Gartley up here at the 618. Then he added right here at the 382, okay? Then he added again at the next 382, and he added again at the next 382, and then he covered it when it made this secondary low down in here is where he covered it all. This is a huge amount of money, and that's why it worked out for him. I was really happy to hear that he did well because this is like the restaurant business, folks. You're only as good as your last meal, and you never know when that one's going to come up. But this volatility that we're seeing, folks, this if you look at the VIX index, people are saying, oh, this is just like 1987. It is nothing like 1987. Not yet. It might get there in the next few days, but there's nobody out there that's afraid. Not at all. You know, I hope, I'm assuming, I don't want to use the word hope, terrible word for trading. I'm assuming that this is what is going to happen. Now, I'm often wrong, but never in doubt. So this is what I think is going to happen. So remember, it's my opinion, and I have to go with it until I think it's over. And then when it's over, I'll take a look at it and see what's going on. That's it. Now, I wanted to share one other one. This was on the E-mini Dow Jones, because this was doing the same thing that the S&P was doing. And you'll be watching here that we had the break right here. There was the 382 retracement right to the money right there. And from there, we dropped another 500 points. Now, to be down 1,200 points, you would think that the VIX index would go nuts to the upside, but it's not. And most people said, oh, yeah, 1,200 points, no big deal. And it usually isn't. The problem is that if this is correct, we're going to go down 3 or 4 more days, Friday, Monday, possibly Tuesday. I would say Monday. Monday might be the big day on the downside. But it may totally be different than 1987. 1987, on October 19th, was the best buying opportunity of the 1980s. And that was coming off of a low that was made way back on August the 9th of 1982. That low on October the 19th was an exact 61% retracement of that low, and boom, away it went to the upside. Now what we're having now at 36.50, that's down a couple hundred handles from where we are right now, 250 handles. That number is a 382 retracement, and we know that 382 is very powerful in bull markets, and this is still a bull market long term. I mean, it's bearish since January 4th, but we're down now. We're down January, February, March, April, May. We were down 5 months. We haven't had 5 months down in this market since, Hector was a pup. That dog's 11 years old. Anyway, that's what we're paying attention to here this morning. So if you have any questions, 877-927-6648. Al has just told me that don't even bother to call, folks, because the lines are just flat out jammed, and there's not much we can do. Let's move over to the market that is really rocking and rolling, and that is our Treasury bonds. Let's get together here. All right, just take a second. Here we go. All righty. There's the Treasury bonds. You can see the 382 retracement here, the 382 retracement here, the 382 retracement here. We back off for 5 days. 382 retracement, getting strong. This is basically a flight to quality scam that they're putting on in the bond market, and believe me, that's what it is. Interest rates are going to be going higher, folks, a lot higher. So just get ready for it. It's coming, and nothing else you can do. Unless something dramatic changes. That's what it looks like of what we're going on. In 1987, the bonds were on their way to 170. I think they were trading at about 85, as I recall. That means they were discounted by 15% because interest rates were very high at that time. Still a little bit lower than we were in 1980, but they're still coming back pretty strong. So that's what we're watching here in the Treasury bond. The gold market, we're having a nice rally off the gold. We bottomed at $17.95. We're up now $60, well, $50. Well, last I thought it was $50. So that's pretty much in the cards for a nice little bump. But I still think we got one more leg down, or maybe two, in the gold market, and that would tell us that this is what we're going to be looking at as we go through these charts here this morning. So as I mentioned, tomorrow our guest will be none other than Stan Harley. Market conditions working in our favor anyway, because with these crazy markets, who knows what's going to be happening. I want to bring this up, folks, because this is the most important chart that we have. This is the mini S&P. You know, we've taken out this low down here now, folks. No, we have not. We're still down in this area here at one standard deviation at 38.40. So if we get below that today, that's where the real problem lies. There's two things to look at. Today or tomorrow, if we go below 38.40, that tells us with a high probability, okay, that we are probably going to have a move that is 1.618 more than the worst day we've had. The worst day we've had so far is minus $1,200, 1,200 Dow points. So you multiply that times 1.618, and it gets you to 190. If you want to do the S&P, you multiply 170 times 1.618, and that'll get you out to about 280. So who knows? That would be beyond. That would be in the limits of the trading that they have at the CME. Hey, let's take a break here. We've got our guest Tim Boss coming up. I hope.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we have live from Florida our good friend Tim Boss, Financial Cycles Weekly. Tim, how are you doing today?
I am doing very well. How about yourself?
Living the dream, baby, on the green side of the grass. My grandpa
That's
told
where
me
we
once
like to stay.
when he
Very
was
good, very good.
he was a young man. His grandfather told him never read the second edition of the newspaper because that's where you might see your name in the obituary. So just read the newspaper once, but not twice. Let's see what you got today, buddy.
Okay, so what we're talking about here is Mercury retrograde. We did have Mercury go retrograde a little over a week ago, back on the 10th of May. And for most of us who pay attention to this kind of thing, we look at this as kind of a disruption in our normal activities of communication communication, transportation, etc. But also it can have an impact on the markets. And we highlighted this in our book, Mercury, Money, and the Markets, which is still available at Amazon.com. And what we're looking at here is an entire cycle. Typically, we look here at the first and third portions of this sequence here, the date that Mercury begins its retrograde motion, which was on the 10th of May, and then on the June the 3rd, it will be making its direct station. That's the end of the retrograde motion, and it starts to move back forward again. So we also have in between things here, what we've got coming up day after tomorrow on Saturday, this weekend, we'll see the inferior conjunction, and this means the Sun and Mercury will be in conjunction in the sky with Mercury still in retrograde motion. And so then following that, of course, Mercury turns back into direct motion on the 18th of June. We get the retrograde return. It kind of comes out of its shadow there and goes back to where it started its retrograde sequence. And then finally on July the 16th, the cycle will end with the superior conjunction. This is the Sun meeting Mercury again at the same point in the zodiac, but with Mercury going direct instead of retrograde. So we have the inferior conjunction, Mercury retrograde, the superior conjunction with Mercury in direct motion. So we want to keep this whole sequence in mind here because as we look at the dynamics here for this chart, that's coming up here for the Mercury retrograde, the Mercury inferior conjunction coming up in a couple of days. We're looking at it here on the 90-degree dial, and our little red arrow at the right of the circle there points to the Sun and Mercury. What they're doing is hitting a couple of midpoints that are quite important here. We're seeing a midpoint of the Aries Vulcanus dynamic going on. This is the 0 degrees of the cardinal signs and the trans-Neptunian factor of Vulcanus. And this is all about communications that are very, very energetic, kind of inspired, and there's kind of a sense of things being very, very upbeat with this kind of setup here. And that creates a lot of powerful influences along the way. Perhaps even more important, however, what we're seeing as well is an activation of the Mars-Apollon midpoint. Our old friend Mars with the trans-Neptunian factor Apollon get together, and this creates a very positive energy for expansion. Far and wide is kind of the keynote there. So we can look at enhanced commercial activities. Maybe we'll get some supply chain problems resolved, things of that sort. Anyway, things getting bigger in a general sense is what's with that. And then it's also action. Mars is about action. Apollon enables it to be directed very, very successfully, and we can get more stuff accomplished. This is kind of a cool thing to see in the midst of the Mercury retrograde period. And then finally, this is also an indication of rising markets. And so seeing that kind of indication in the textbooks, saying, okay, let's check this out and see what this actually looks like. So we've done a little bit of back testing here and checking out different market configurations. This is what happens with the S&P 500 when we get these Sun-Mercury inferior conjunctions. That 0 point in the middle is the date of the actual lineup with the Sun and Mercury. And this is based on 125 previous examples of this having occurred in the past, and then studying what the S&P has done on that basis. So this is a pretty stable kind of statistical analysis here. When we get that many iterations of something, we can really dig into it a little bit more deeply. So what typically happens is we get a decline in the markets heading into that time of the inferior conjunction, and then after that we see a potential, at least, for the S&P to pop back up again. Now, it's kind of a nice chart there. It gives us a kind of an optimistic outlook, but when we actually go back and dig into it, there's some caveats along the way. What we did was search for the optimum trade coming out of this, and based on this Sun-Mercury inferior conjunction with the S&P, we'd say the greatest advantage would be to take a long position starting next Monday on the 23rd of May, and then hold that till Tuesday the 31st, so a week and a day for that swing trade there. This has only a 68% probability of being a winning trade. Expected ROI is around 0.5%. And so these numbers are a little bit of a cause for caution there. Wow. I personally like to see things a little bit stronger than that, roughly 2/3 percentage in terms of taking a trade myself. I'd like to see a little bit more confidence in it, but this is the best we can do with our back testing here. This looks like the optimum situation. Now that ROI of about 0.5% has to be kept in comparison to what we've been seeing. Yesterday, in fact, the S&P was down over 4% in a single day's trading, so this is not too desirable looking for a lot of reasons there. At any rate, we wanted to backtest this and show that this is something that may give us a little bit of breathing room, a little bit of respite in the midst of the downturn that we're seeing now. This is an opportunity for potentially a swing trade at least.
Wow, that's really interesting. And I'm in the same camp here, that I think we're making some type of a bottom here probably on Monday, is what I'm watching.
I believe we could see that, at least a setup here with this. We also checked out gold with this same configuration here, and it's a little choppier kind of outlook, but still we're looking at that bottom right at that 0 point, and this would be congruent with that pattern if we expect to see a little bit of a turnaround in the market environment. Based on this, however, it's even a little bit worse. In this case, we'd hold off and wait until the 30th of May, and then this would be a one-day position on the long side, with just a 63% probability of being successful. Now, again, this is a personal matter of the kind of risks that you're willing to take. It's definitely a favorable kind of dynamic, but it's not a slam dunk in my book anyway. And again, we're looking at an ROI of about 0.5% return with that. So that's a little different configuration. And then finally, we want to take a quick look here as well at the oil dynamics. Let's see if I can get my screen to cooperate for me here. Let's bring one up. Yes, no, hello. There we go. Okay, the mouse was not working right. So this is actually, we're using the USO, United States Oil ETF, as a surrogate for the oil markets in general. There are lots of different things we can look at there. We have found this pretty handy to use as kind of a broad indicator of the oil dynamic and without getting into the specific futures contracts. So this is something
this is great. We'll be right back with Tim Boss, folks. Financial Cycles Weekly.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, talking with Tim Boss, Financial Cycles Weekly. Do you want to continue, Tim?
Absolutely, yeah. We were just had pulled up this chart for oil, and what we wanted to point out here is that we looked at the S&P and at gold, and both of them had a pretty clearly defined potential for a bottom at that 0 point, which is the date of the Sun-Mercury inferior conjunction coming up 2 days from now. And in the case of oil, it's a very, very choppy kind of picture, so we had to dig into this a little bit. We have come up with an optimum trade here, which is a short position. Holding off until actually the middle of June, after the end of the Mercury retrograde, around that time of the retrograde return. We're looking at selling short on Thursday, the 16th of June, and then covering the position the next day on Friday, the 17th. And that has a 74% probability of being a winning trade. And the advantage, of course, is a very short-term exposure in the market there. And the average expected ROI a little over 1%. So that looks like a more favorable kind of position. And, of course, we wanted to take a look today at Bitcoin as well. We've talked about Bitcoin a lot of times in the past, and this is a very different kind of chart than we've been used to seeing here. And, of course, we have been using for some months now the planetary price lines for Venus and Kronos in the fourth harmonic to define the relationship with support and resistance with Bitcoin. And in fact, here, if we zoom in a little bit, we should be able to see here, if I can get that chart to come up. Here we go. The Kronos support lines. This goes back roughly to the beginning of the year. We started to see that Kronos line providing active support, tested again and again with Bitcoin around that 37,000 mark. And then, of course, we've recently dropped below that. The important thing to see here is the fact that move downward hit the next level of the Kronos support right at that 28,200 range that we've been talking about.
Tim, we've got a caller from Florida. Jim from Palm Florida is on the line. You want to ask your question, Jim? Go ahead.
Yes. Now we've broken out of this morning's trading range on that E-mini. 39.22 is the high, and we've gotten 10 points above that. So I don't know whether Tim had saying you're going short into Monday the 21st, or actually the May 21st is a Saturday, so we're talking a weekend. Right. But from that period from May 10th to May 21, which way is Tim leaning on the E-minis?
Well, we've definitely been to the short side here, since Mercury went retrograde on May the 10th, and we're looking for a potential trading bottom, let's call it that, coming up on Monday, based on our analysis here with this astrological event, which occurs, as you point out, over the weekend. Sometimes we get an early effect. It could hit tomorrow on Friday. We may be seeing some evidence of already today, but typically what happens with a weekend event like this is that we wait for the following Monday to enter a trade to make sure that the market's behaving like we think it will. So it doesn't always cooperate, but we like to be able to use that. So this is definitely a short-term switch to the long side here.
So and then my correlated to that, Larry, where would you run your fibs now in the ABCD on this little up move where resistance would be? That's where I'm having trouble placing my fib lines here.
Well, the 382 retracement of the swing that I was looking at, which was the ABCD, I posted that in the room here just a little while ago. That came in at 39.40, I believe. 39.40, 39.45 is where I think the resistance should be. But that's just an assumption based on looking at what's happened in the past. And I still think we're going to come down hard into Tim's buy day, which is May 23rd. I don't see any reason why a whole lot of people be buying today, but the NASDAQ is up, I understand, and the S&P's up and Russell's up. Only the Dow was down, so this is still a little dead cat bounce. We lost 1,200 points yesterday, folks. That's still in the mind of those people, in my opinion.
Okay.
There was a pretty serious drop, in fact, yeah. And of course, yesterday the NASDAQ was down 4.75% as well. So we're seeing some pretty noticeable moves, shall we say?
Yeah, this is for sure
stuff to pay attention to.
Thanks for your insight, because I was curious when something like this falls on the weekend how you would handle that. So
right, there's no hard and fast rule, but typically we see the impact coming in the following Monday.
Great, thanks for your help.
Okay. Very good. Continue on, my friend.
Appreciate that. So anyway, we've been continuing to watch this support level here, and we've been interested to see, even after this sharp decline in Bitcoin, it went back down to that next lowest Chronos support line, and it's been playing with that. We did get a little bit of penetration during the course of one day's trading there, but essentially we're seeing that still very active as support at the 28,210 mark there. And so I checked it earlier, and it was at 29 and change, and just a few minutes ago it had bounced back up above 30,000. So, nothing dramatic at this point. However, we did take a look as well at this same Mercury inferior conjunction dynamic with Bitcoin, and this is what this chart looks like. And we have to remind you, of course, that we have very limited number of iterations here. Bitcoin has been trading such a short period of time that we have to take this with a grain of salt, just because of the lack of statistical significance. But typically, what happens is a Mercury inferior conjunction will trigger a bit of a rally with Bitcoin. And so based on that here, we're looking at holding off till Monday the 6th of June. Looks like the best entry point here to let that get a little bit of confirmation, a little bit of potential momentum. And then again, a swing trade a week and a day here, closing that out on the 14th of June, that Tuesday. This particular setup, based on our back testing, has 84.4% probability of being a winning trade. Those are the kinds of odds that I personally like to see before putting a toe in the water. Average expected ROI here, again, based on Bitcoin's extremely volatile past history, we can look at about 57, 58% ROI for that week-long trade. So if that bears out, that could be a significant move and give some of the longer-term holders of Bitcoin a bit of encouragement along the way. There's certainly been a lot of discouraging news, and I've been talking with some clients and students recently. Have been, I'm done with cryptos. I'm getting out of this mess. So it's understandable, but I believe that patience will bear out here with that.
Okay, that's very good. Tim, overall, do you believe that the cryptos is a logical market? I mean, is it a bubble of any kind, or how do you gauge it?
There are different trenches in the crypto space, and various plays there have merits and demerits, shall we say, attached to them. I'm a strong believer in Bitcoin because it was the original one, and I think that has very, very positive long-term prospects. Okay. Others are not so sure of some of the altcoins, so to speak.
Hey, stay with us, Tim, to the very end. We will tell the folks how they can reach you. Okay, we'll be back with Tim Boss, folks. Financial Cycles Weekly.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Okay, we're back, folks, talking with Tim Boss, Financial Cycles Weekly. And Tim, do you have any webinars coming up that the folks might like to listen to?
Absolutely. In fact, we're doing one later today. The title is How You Can Turn Market Chaos into Trading Success. So we'll be talking about some strategies for dealing with all the wild and crazy stuff that's going on here, and how you can put together a sensible trading program with that. To get connected, go to bit.ly/TimLarryP. That's all caps except for the initials there, capital T, capital L, capital P. That will get you connected so you can sign up and get notification on today's webinar, which is absolutely free of charge. as well as our future events as well, so that you can get those notifications whenever we're doing things like this. And we typically have at least once a week something like this going on, so stay connected with us, and we'll be glad to give you some suggestions about how you can get results from the Astro Trading Advantage. That's what we're really all about here.
I have a question. How do you answer someone that says being an astrologer is antichrist, that it's against the Bible and all that stuff? I have a hard time believing that, because the best source of astrological stuff is in the Vatican. How do you answer that question?
Well, you're quite right. I've visited the Vatican myself, and there's this astonishing, all the astrological material that's there in one form or another. And in fact, you're just looking within that history of the Roman Catholic Church, some popes were very much opposed to astrologers in history. Others were astrologers themselves. And so it's kind of a variegated history there. But for me personally, from that Christian perspective, I like to remember the story of the Christ child and the wise men from the East who came to visit because they were astrologers. They understood that something special was going on astrologically, and used that to turn their attention toward the true source of inspiration and the evidence of divinity there. So if you use astrology the right way, it can really enhance the spiritual practice, but there are lots of prejudices out there as well.
Amen, brother. I'm not one of them. Hey, listen, buddy, thank you very much. We'll have you on again soon. Tim Boss, Financial Cycles Weekly. We'll be back, folks. Tomorrow we have Stan Harley.